Okay, good morning. Today is Thursday, May 10th, 2018. This is Chaikin PowerFeed, your daily market digest. I am Dan Russo, the Chief Market Strategist at Chaikin Analytics. If you want to follow me, you can do so on Twitter. I am at Dan Russo _CMT. And PowerFeed TV is brought to you by Chaikin Analytics. You can get your free daily Chaikin Power Feed at www.chaikinanalytics.com/PowerFeed TV. So why don't we just kind of jump right into yesterday's action? The market was strong. The S&P 500 kind of finally moving through first resistance, some of the levels that I've been highlighting, closing up nearly 1%. Energy was the best sector as crude oil rallied more than 3% on the heels of President Trump's decision to leave the Iran nuclear agreement. Financials and materials also outperformed. Utilities were the only sector to finish in the red. That was probably a function of yields moving higher yesterday. Consumer staples and consumer discretionary rounded out the bottom three performers. As I said, the 10-year Treasury finished down 7/32 in price, which pushed the yield to 3%. Gold was little changed on the day, as was the dollar. So kind of the big move was the fact that the S&P 500 did in fact move through the resistance level, which we'd been highlighting at 2658 to 2675. Nice to get those lines off the chart. You can see where the index had failed numerous times over the past week and a half or so. So now what are we highlighting? On the upside, your next spot is 2710. That has been resistance about 3 weeks ago. Rally failed there. We'll see if we can get through. And then ultimately 2741. Those two levels will begin to give the bulls conviction that the secular uptrend is in fact resuming. As our listeners know, my view is that the market has been consolidating within the context of a secular uptrend, but we do want to see the S&P 500 move through these levels, which I have been highlighting, to kind of give you conviction that that is in fact the case. So 2658 now becomes support. Below that, the 200-day moving average is at 2619, and then we have kind of the February 8th lows down around the 2580, 2585 level to look at. If you're bearish, you want to see a sustained close below the 200-day moving average. You want to see an undercut of the February low down around 2533. That would give you conviction that the secular uptrend was in fact reversing. So now moving on, your market in a minute. The S&P 500 did rally 1% through first resistance. Oil was higher by 3%, and as I said, energy shares led. Market breadth remains constructive, and it does confirm some of the price strength that we are seeing. We'll look at a chart of market breadth a little bit later in the show. We're focused on mobile payments as an investment theme today. Every Thursday and Friday, I pick an industry within the market to focus on, pull an interesting stock idea out of it. Today's industry is mobile payments, and the stock idea is Long American Express. Futures point to a flat open as we get underway Thursday. Looking at the major indices via the Chaikin Power Bar. Again, the Chaikin Power Bars tell us how many stocks in each industry are rated very bullish or bullish by Chaikin Analytics, how many are neutral, and how many are bearish or very bearish. Obviously, we want to see more bullish stocks than bearish stocks to give us an indication that the market is going to go higher. And according to the Chaikin Power Bars, small cap stocks remain somewhat more bullish than large cap stocks, and the major indexes are mixed. That kind of lines up. Market's been consolidating, but small cap has been outperforming, notwithstanding yesterday. It's been a big theme of ours at Chaikin Analytics. Every day in my morning note to Chaikin Analytics subscribers, we highlight the fact that small caps have been outperforming. It's a theme we've been talking about. It's a theme we've been harping on. Two key drivers there are strength in the dollar, as well as the fact that now that we're through earnings season, we expect trade tensions to become more of a front burner issue for the market again. They kind of got moved to the back burner as we were moving through earnings season. So just breaking down the power bars quickly for the Dow, pretty even, 7 bulls to 8 bears. The S&P, you can see, is still skewed to the negative side, although this has been improving all week. 80 bullish or very bullish stocks for 105 bearish or very bearish stocks. NASDAQ skewed positively slightly. And there it is, the small caps, 442 for the bulls, 336 for the bears. You can see the big move down in bonds yesterday drove yields higher. And obviously, as we said, the energy sector was a big outperformer. S&P 500 up about 1%, energy up over 2%. You can see the power bar is 11 bullish to very bullish for 3 bearish to very bearish in the energy sector. If you're a stock picker, that's probably a good idea to go hunting in that sector. Every day, Chaikin Analytics PowerFeed subscribers will receive a stock of the day. Today's stock of the day is Fortinet, ticker FTNT. Comes to us from the computer software and services sector. It has a very bullish Chaikin power gauge rating. Stock went out at 59.02 yesterday, up 3.65%. The Chaikin power gauge rating for Fortinet is very bullish due to very strong earnings performance, very positive expert activity, and strong price and volume activity. So the technicals line up well. Would love to see a little bit of an improvement on the financials, but our model takes all of these factors in aggregate to assign this very bullish rating. So let's take a look at the chart. Upper left-hand corner, very bullish rating. There it is. We have a strong trend on a stock that's in a strong industry, so that's a great starting point. Reading from the bottom up, the ribbon here tells us where the power gauge has been over the past year, currently on a very bullish rating. And then what we want to see is we want to see confirmation with the stock outperforming relative to the SPY. And this is a proprietary relative strength indicator, proprietary to Chaikin Analytics. And when the stock is outperforming the market and it has a bullish or very bullish power gauge rating, that is a powerful combination for potential outperformance going forward. So next thing you want to do is kind of look at, all right, we know we have this stock. We know it's compelling on the long side. When do we get involved? Our overbought, oversold indicator can give you an indication of where the stock is currently within its trend, and it is in fact closer to oversold than to overbought. And the stock, you can see, is actually breaking out through the $57, $58 level, which had been resistance, with money flow turning positive, signaling that institutions are buying the stock. It is above a long-term trend line. I can tell you I do a lot of work around momentum and trend following. This stock hit every trend follower's screen last night with this breakout. Would not be surprised to see the stock continue to work higher, depending on how you like to trade. Maybe you want to wait for a pullback, or maybe you want to add a little bit here and see what happens to get it on the screen. But this is a stock that is going to be on the trend followers radar screens going forward, as it does in fact break out from a consolidation that we've seen for the past, call it, month or so. All right, sector tracker. Every day we will look at kind of how the major sectors have been performing over the last 5 days. Technology, no surprise, market strength here really has been strong ever since Apple's earnings last week. Over the past 5 days, up 4.33%. Industrials also strong as well. As some of the trade tension talks have eased, we'll see how they do if the trade tension talks do in fact become front burner issue again. Interesting to see financials doing well here. Beneficiary of rising rates, so that is what you would expect to see in this environment as rates are going higher, and I expect them to continue to go higher. My view on the 10-year yield is that above 2.6%, the path of least resistance is higher for yields. Would not be surprised to see us get to 3.2%. A lot of people think that rising rates are bad for equities. I've done a ton of work on this. Doesn't really become an issue until we get to around the 5% level. So, mainstream media is going to tell you rising rates should be a concern for equity investors. I am going to tell you to ignore the mainstream media when it comes to that point. Although with rates rising, you would expect to see utilities underperforming, and that is in fact the case. Utilities and their yield, sometimes used by equity investors as a bond proxy as rates are going up. Not surprising to see utilities get hit. What is surprising is to see real estate holding up. Keep an eye on that sector. This could be an interesting spot to go looking for short ideas as rates continue to rise. Real estate known for their dividend payouts as well. So they get often used by equity investors as a bond proxy. Let's keep an eye on real estate here, because if rates continue to rise as I expect them to, I would expect real estate stocks to get hit. Interesting idea here because they've been rallying. So for those investors who like to go short, or short individual names, real estate could be a compelling hunting ground. Our industry in focus today, which you would receive every day as a PowerFeed subscriber, pharmaceutical services. The pharmaceutical sector has been an absolute nightmare for investors. You can see that the Chaikin power bars are skewed 3-to-1 to the bearish side, 15 bearish or very bearish stocks, 5 bullish or very bullish stocks. And over the past 6 months, pharma has underperformed the S&P 500 by 8.56%. That is massive underperformance. Its power bar ratio, which measures future potential, is weak, with more bearish than bullish stocks. It's currently ranked number 20 out of 21 subsectors that we look at in Chaikin Analytics. It's actually moved down 3 spots, so it's getting worse over the past week. Some of the indicative names in the group: Dermira, Aerie Pharmaceuticals, and Nectar Therapeutics. Now, the one caveat I would have for investors here is a lot of these stocks in this group are going to be early stage developmental pharma, spec pharma, and biotech companies. You really need to do your homework here, because if they do have names that are in clinical development and up for FDA review, those could be binary events that send the stock up and down large percentages very quickly. So, when looking at names, either long or short in this group, really be aware of what they have in their development pipeline, because those binary events, it's not surprising to walk in one morning and see a stock up or down 50 or 60% because of an announcement out of the FDA. So let's look at one of the indicative stocks in the group, Aerie Pharmaceuticals, ticker AERI. Very bearish power gauge rating, went out at 49.75 last night, down 40 basis points. Look at the underperformance, down 40 basis points when the S&P 500 was up nearly 1%. Over to the right-hand side, we can see that the trend in the stock has been weak, and it is, in fact, in a weak industry group. This is where you want to go hunting for bears, obviously. Moving to the bottom of the chart now, we can see that over the past year, the stock has either been bearish or neutral. It has been bearish or very bearish since December, and the stock has been underperforming the SPY since January. So the market, i.e. underperformance relative to the SPY, agrees with our model, the very bearish rating. That is a compelling setup. So now we look at the tactical side of the equation. Our overbought, oversold indicator is currently oversold. Stock looks like it traded weak following their earnings report 2 days ago. So if we're looking at this as a potential short idea, we want to wait until this indicator gets back towards overbought territory. We can see that institutions have, in fact, been selling the stock. Chaikin money flow reading at just about its worst levels of the past 12 months. We can see here on the chart, stock is below a falling long-term trend line. Slight outperformance, a slight beat, but this is a money-losing stock, right? They lost $1.05 a share. Street was looking for them to lose $1.11. But you just want to kind of keep an eye out here. If the stock does, in fact, pop back to the 55 level, might be a compelling spot to put some out. Our earnings update. Earnings season is winding down. You can see CenturyLink and Bookings Holdings beat expectations. Fox A and Mylan miss. Big one tonight is going to be NVIDIA in the semiconductor space. That has been a market darling, and semis are a key leadership group. Duke and Nectar, bearish rated stocks. We advise caution when holding bearish stocks ahead of earnings. Here's the breadth indicator that I wanted to look at as we get close to the end of the show here. The S&P 500 advanced decline line moving to a new high yesterday, confirming the strength in price. This is a bullish situation. Advanced decline line shows us is a cumulative score of advancers minus decliners. When that's moving to a new high, that's generally a positive for the market. And our thematic was mobile payments, and the iPay ETF, the Prime Mobile Payments ETF, ticker IPAY, has a bullish setup here, outperforming relative to the SPY. Money flow has been positive and on the verge of a breakout through the 38.5 level. It's an interesting ETF to go digging around for long ideas. Either own the ETF or loan some of the individual constituents. American Express is a name that looks compelling to me on the long side, ticker AXP. That kind of winds it down here. You can get powerful and profitable stock ideas and more every day as a PowerFeed subscriber. www.chaikinanalytics.com/PowerFeed TV. Trade well, everybody. Have a great day.